Good evening, everyone. Very warm welcome to each one of you present here. I, on behalf of IPNet, welcome you all at the 34th webinar in the series of webinars organized periodically under the umbrella of IPNet, the National Network for Insolvency Professionals. To begin with, let me invite IP Parag Singalji, General Secretary of IPNet, to deliver the formal welcome address.
So friends, on behalf of IPNet, it gives me immense pleasure to welcome all of you to today's webinar, which is a fantastic topic today, Reimagining the Code, a strategic roundtable on reinventing the IBC for the decade ahead. Friends, this is typically not just another session. It is a platform for reflection, dialogue, and of course, forward thinking. The insolvency code, as we all see, it has come a long way since its enactment in 2016. I hear people saying it is still new. I'm sorry, I don't want to believe that. It is almost 9 years now. So, but therefore, what I'm saying is it has transformed the landscape of India in relating to insolvency. And of course, it brought in a new credit culture. That is undeniable. But as we move forward, now there is a pressing need to revisit certain areas. We need to remove bottlenecks and we need to introduce reforms that are aligning with the realities of business and finance. Now, today's roundtable brings together some of the voices from the insolvency ecosystem. These are the professionals who have worked at the ground level and they have absolute rich insights into what works and what needs to change. The discussion will focus on timelines, avoidance transactions, resolution as a going concern, and of course, simplifying the network of the framework and issues typically that go at the heart of the code's effectiveness. Well, I would also like to extend a very warm welcome to our all distinguished panelists and of course our moderator Anuji. Thank you for
Thank you, sir.
thank you for lending your time and expertise to this initiative. And a special thanks to all the participants for joining us and showing typically that the spirit of reform and collaboration is alive in the insolvency community. So friends, let's use this opportunity to engage, challenge ideas, and of course propose some bold recommendations, but of course practical recommendations. IPNet is your forum, friends, and together all of us can play a meaningful role in shaping the future of the code. Thank you, and I look forward to a very rich and a thought-provoking discussion. Thank you. Over to you, Anvi.
Thank you very much, sir. Now I would request IPNet to play the short video showcasing our purpose, initiatives, and contributions.
In the fast-evolving world of insolvency and bankruptcy, professionals need more than just knowledge. They need a strong network, continuous support, and a unified voice. As the challenges of the insolvency profession grow, so does the need for a platform where professionals can come together, share their experiences, and find collective solutions. That's why IPNet was formed. Promoted by Transition, IPNet is more than just a network. It's a mission to unite insolvency professionals across India, empowering them with the tools, knowledge, strong leadership, and community support they need to excel. Our purpose is simple: to create a cohesive community of insolvency professionals that stands strong together, advocates for their interests, and drives excellence in every aspect of the profession. At IPNet, we believe in continuous learning and collaboration. Our activities are designed to ensure that every member stays ahead in their field, from specialized study groups that dive deep into critical topics like CIRP, compliances, and many more, to webinars and workshops that bring the latest insights right to your screen. IPNet is your gateway to professional growth. Backed by Transition, a leader in insolvency training and resources, IPNet is committed to promoting the interests of insolvency professionals. Our goal is to ensure that every IP, no matter where they are, has access to the best resources, strong leadership, and a network that truly understands their needs. Join us in this mission to build a stronger, smarter, and more connected community of insolvency professionals. Together, we can overcome challenges, shape the future of the profession, and make a lasting impact. IPNet, National Network for Insolvency Professionals in India.
let us start the panel discussion. For that, I would invite moderator Anuradha Bisani ji to take charge of the event and start by introducing the panelists.
Thank you, Harmeet. Thank you, Ashish sir, for giving this opportunity. I would first introduce the first panelist today, which is Mr. Sanjeev Ahuja. Sir, you're present, right? I saw him.
Very much.
Yes.
Good evening. Thank you.
Yes, sir. Good evening, sir. Sanjeev Ahuja is a chartered accountant, cost accountant, and finally an advocate enrolled with Bar Council of India. He is a strategist at heart, endorsed further by his exposure and experience spanning more than 30 years across industries, including consulting, infrastructure, FMCG, automobiles, and textiles. Through his career, he has been associated with organizations including Suzuki, Maruti, Apollo Tyres, Ernst & Young, Booz Allen and Hamilton, Arvind Mills, DS Group, to name some of them. He is currently a resolution professional and aspires to be an arbitrator and mediator of choice in the noble domain of alternative dispute resolution. Welcome, Sanjeev, sir.
Okay. Good evening. Good evening, everyone.
Sir.
Yes. I'm audible.
Also, sir,
Yeah, please.
today for you, the topic is on prospective reforms and time-bound outcomes under IBC.
I did
like
read that. Yes, I did read that. So in my discussion points, I'll cover I guess most of them. In case there is something which is still left out, we can probably take it as part of the Q&A. So thank you, Ashish ji, for the invite. I'll straight away, go on to the topic with my, sharing my thoughts. So, friends, back in 2017, when we all started, or 2016 end, and this was a big thing, game changer called IBC, apart from the GST, but frankly, the game got changed by IBC. But, at that stage, we had more questions than probably less or no answers. It was okay, accepted a new law. We were all kind of grappling with what exactly will happen. But now if we have questions and we do not have answers, that's a pain. So that's definitely a concern, and that's where I'm making my the first statement. So few statements which I would say, which probably we can make after seeing the law evolve for 8 years and in all directions. Frankly, it's been a roller coaster ride, and what you get to hear from me is more from a RP perspective and less from a legal perspective. I've been not going to NCLT and CLATs as a lawyer, but I have been there as a RP. I've interacted with the stakeholders. I've seen the amendments. I've seen the orders getting overturned by different forums. And that is the reason why I'm saying what I'm saying. So couple of things. Let's not be in denial. If we keep, ourselves in denial, then we don't even understand, we don't recognize what the problem is. And then how would we work on that? So that's the first statement. Let's not be in denial. Let us learn from our mistakes. Let us take all the stakeholders along. Few amendments have actually happened because OCs ko nahi mil raha, authorities ka ye problem, whether it's an interpretation issue, enforcement issue at the day end. The problem is if all the stakeholders are not taken along, either in the application of, the law while making amendments, then we have a problem because somebody or the other will go to the court. And then we get into the trap of equity and fair justice and all. Why do not we have a balance in terms of, every a piece of pie for everyone? And then a very important aspect, avoiding patchwork and avoiding a piecemeal approach. Because what is the dream mantra for a policymaker? Anyone who's legislator, regulator, a place for everything and everything in its place. If we keep working on the premise of patchwork and that too in piecemeal, I think it's going to be a difficult journey even going forward. 5 broad areas of concern, if I were to if I were to speak about, which continue to be areas of concern. The first one is, of course, everyone is very much aware, is the timelines. If the timeliness is not adhered to, is not respected, how do we ensure the time value of money, which has been the basic premise of IBC? It's a commercial law. But we've kind of, we all say, but somewhere we all probably lose the track. So timeline is one. Second is equally important, certainty and finality. Of course, there'll be a reference time and again about the Supreme Court's recent judgment. And that was the biggest question which was asked. what about the certainty? And people in a lighter vein has been saying that, the future was uncertain all this while, but the past has been made uncertain. May not be, in lighter vein, we can all see that, but it has a repercussion. It has a lot of bearing on the credibility, on the sanctity, on the basic law itself. So timelines, the certainty of finality. Third is the form of a substance. Are we missing the bus somewhere? I'm not saying that form is not important. Transparency, consistency, all those things are important. But form over substance cannot, derail this entire momentum. The next debate continues to be a problem, which is a debate between recovery and resolution. Let's all try and really understand what exactly we mean, what is practical as well. If there needs to be a striking a right balance between these two terms, let's agree to it. Let's change some definitions. But let's not keep saying both these terms in the same breath. That's just not going to be possible. And the last one again, people would probably relate to that. The whole debate about mandatory and the directory. Who's mandatory? What is mandatory for whom? What is directory for whom? Otherwise, this is leading to the discretion, and that is again a double-edged sword which can be used depending on what situation is and who's the victim. All the stakeholders have to contribute. Let's not keep passing the buck. Four very specific areas to focus: the claims with regards to the collation, the verification, the rejection, and of course, leading to the voting power. I think there has to be a lot of focus, because when somebody sits in the COC, he or she is in a driving seat. So somewhere we need to kind of go back and understand, are we giving enough powers which are in parity to the RP, who can RP, so that they can actually make sense of who actually is sitting. Otherwise, this is leading to frivolous litigation. The 28,000 applications, what every forum wants to, or every stakeholder wants to say with pride that 28,000 applications or more have been withdrawn prior to admission. How do we interpret this? Is the law amazing? Has it really evolved the way it had to? Or we are saying that somewhere people are not getting the required confidence. It can be interpreted both ways. So then let's also analyze this kind of a data. What are we doing on frivolous litigations? The courts are under humongous pressure in terms of infrastructure. We need to really assess. There has to be some hurdles where people are still not getting the clarity, but we need to set the record straight and assess why so much of frivolous litigation. And another point was timelines of 180 days. Maybe at a point in time, for some reasons, it was right that we should make it happen quick. We should make it fast. But a running business, 180 days, a professional with his team trying to understand what's happening. He's parachuted. We want everything to be done within 180, 270, 330. And eventually it takes forever to decide and give finality. Maybe there is also some more time to be given to ensure that the process is run nicely, at least for the companies where the CD has to be managed as a going concern. So I have two radical suggestions, and I'll leave after that with two questions. One is, maybe policymakers and the judiciary, they need to be interacting more and more openly. We all get to understand when there's a 29A versus a 32A, what exactly is the intent, the objective, the actions required and all. Maybe we understand more. Maybe it's not by hit and trial, but we hear them out. We understand the perspective. 12A happened. It was a kind of U-turn, but we continue with whatever the ails and all. Some people benefit, they speak positive. Some people don't, and they speak negative about that. Similarly, SC order has been passed recently. Can we get a peep into the mindset of a judge? We are not getting into a situation of judging the judge, but maybe it'll be great to understand a perspective from the top person who finally has decided, taken a view after 5 years. And I leave after just asking two important questions. Maybe eventually, when Ashish ji comes in and he'll also give a legal perspective, the law in between the orders, what exactly a RP or a NCLT or NCLAT do? In between the orders, whatever is the last decision is taken as the law for the time being. And then after that, once it gets overturned by the next higher forum, who eventually is wrong and who is right? Maybe the RP and CLAT at a point in time is right, and then the NCLT and Supreme Court is right, but one needs to really understand that what exactly needs to be done. And the second question is, when it's just NCLT which appoints the IRP and discharges the IRP, by default it should be allowed that the RP becomes a respondent in an appeal which happens at any stage later. He's been discharged formally. So there should be a mechanism. We should be talking more about this as well. So there are few aspects which require a deep dive debate, but it's great that we have got started with this, this special event on this thing. And to me, this debate should continue till the time we really come with some broader answers. And this should be taken as more of a constructive criticism rather than, a shoot and scoot. So that's it from my side. And I'm going to be around for, a Q&A. Thank you.
Thank you, Sanjeev sir. Sir, we will have a question answer series after the end of all the four speakers, right?
Sure.
So be available for us.
Right.
We move on to our second panelist, Mr. Ravindra Belur. IP Ravindra is currently the proprietor of Belur and Associates, Chartered Accountants, and whole-time director of Belur Resolutions Private Limited. It's an IP based at Bangalore. His company and he currently focuses only on work related with insolvency profession. And his firm was focusing on strategy management consulting during 2005 to 2017. He has overseen 3 successful resolutions and liquidation of 4 companies till date. Ravindra was working in various industries for 16 years up to 2003, which included the turnaround experience in the role of a CEO of a polyester yarn manufacturing company in Indonesia after Southeast exchange rate crisis during 1997-98. He did his full-time MBA from Cranfield School of Management, UK, after his turnaround experience during 2003 and 4. Sir, Ravindra sir, we welcome you to the IPNet webinar. We would like you to give your opinion or rather share your thoughts on avoidance transactions and dealing with non-cooperation, sir.
I think, Radhaji, before Mr. Belur starts, I will request all my friends, all participants here, if they can open their videos. I think this, as I always say, like to see smiling faces. It's not a faceless meeting. Thank you so much, friends. Thank you. Mr. Belur, yeah, go ahead, sir.
Yeah, thank you, Anuradhaji, for a kind introduction.
Thank you.
I would like to share some thoughts based on my experience and 2-3 suggestions which could help us in improving our functioning connected with the non-cooperation of directors and other service providers, as well as how the adjudication of avoidance transactions could be improved. So both these aspects we have connected together because avoidance transactions is an important aspect as per IBC 2016, and it is across the world also, including as per the UNICITRAL model law. Of course, I would share that there was an extreme thinking in one of the international seminar connected with the avoidance transactions some time ago, last year, I think. They said that these litigations take a very long time and we don't see recoveries. This is the experience of some other jurisdictions also. We don't see a lot of recoveries happening. Should it be really there? Should there be avoidance transactions at all? Was the view of one of the speaker. To my mind, there needs to be this avoidance transactions in an IBC scenario, and if not anything else, it should serve from the detrimental. It has a detriment and some kind of a thinking regarding the governance in the minds of all the directors. This is how I would put it. Now, coming to the non-cooperation, we as RPs face non-cooperation at different levels. starting with handing over of custody control. And we also see tacit non-cooperation, and also we see extreme non-cooperation of not handing over even one piece of paper. This is what we come across. And what do we do, or what can we do? What we have done, many of us, is that we depend on the auditors, service providers. Many times it works and it helps. And in case you have the user ID password of GST or VAT, it is a great information. And in one of the matters, we could get the data only from the VAT records, that too after getting VAT ID and password from the VAT department. We have not been successful in getting GST, VAT and GST user ID and password, but VAT we have done. And we could file an avoidance transactions only based on the VAT data, because we were able to identify a lot of round trip transaction and fake sales, etc. So this is one aspect. In fact, I had given a suggestion to MCA and IBPI stating that we should get user ID and password as soon as the commencement of CIRP happens. There has been a very positive response that they would consider when they go for the next round of changes. So this is something which we should happen, and I think it should happen connected with the income tax also. I stressed on the GST because all the sales, purchase details, customer-wise, supplier-wise data you get, and it is a great source for understanding the business, as well as for the filing the avoidance transaction at some point of time. As far as the non-cooperation is concerned, in my view, the benches should, when the RPs file, they should give a direction in the first hearing itself, that the directors and other service providers are expected to hand over all the documents, whatever is concerned, and of course the custody and control without even before issuing the notice under Rule 11. So this is my thinking. And fortunately, in one of the matters, the bench could pass such an order. And of course, it has not resulted in the directors handing it over, but at least it helps in filing a contempt petition, so that whether the contempt petition helps or not, that also we have to see. In this connection, my thinking was that in Singapore, in Singapore IBC, I mean, similar to IBC law, the insolvency law, there is a section called 244, which gives the bankruptcy court even to asking whoever is not supporting or cooperating, them to be arrested and brought before the bench, and they have to give an affidavit, and there can be a seizure of the books of accounts documents. So this is something which could be considered. This is another recommendation I have in my mind. And as far as the avoidance transactions is concerned, I am happy to note that there are many interesting judgments which are there as it is, but it is not happening all across all the benches, and the delays in adjudication of these is more to do with the capacity of the benches and capability of the bench members also. So, considering that there have been in some of the papers I have submitted at the IBBI, I have seen that there are suggestions about what you call dedicated benches only to deal with these avoidance applications. I think that is something which the government should consider, and maybe the IPNet can recommend or re-recommend this aspect. So then only the adjudication can happen in a timely manner. Another, there is an interesting section in New Zealand Companies Act. I'm not sure whether we have a similar section, but what I have seen is that if the directors are not keeping the books of accounts on a in a proper manner, there is only penalty of some 5 lakh, 50,000 to 5 lakhs or something. That's what I happen to read. But this particular section 300 is called section 300 of the Companies Act of New Zealand. It says that in case a company goes into a liquidation, this is only in a liquidation scenario. In case a company goes into a liquidation scenario, and the company is not in a position to pay all its creditors, and they have not maintained the books of accounts till the date of the liquidation, they become personally liable for all the liabilities. So, I mean, this is something which I thought it is a good decision. Possibly that jurisdiction must have also faced the similar issues like ours as we are facing. The reason why I consider it as a good decision, it would act as a good detriment for the directors to make sure the books of accounts are kept up to date and they are audited. So this is what I just wanted to know whether I have 1 or 2 minutes or Anuradha ji?
Yes, sir.
Yeah, 2
Yes,
minutes
sir.
will take.
You can
So-
take 1 or 2 minutes.
Yeah. So this is another suggestion, what I have thought about. The question was also whether FCs have any role regarding the filing of the avoidance transactions. That was one of the aspect as a guiding question which was put for our panel discussion for my topic. In my view, I think we should focus on ourselves rather than thinking about the others. That is my view. The reason is if there is a fraud, especially the public sector banks and the private sector banks, when they come to know about the fraud, they have to necessarily file a complaint before the CBI or before the economics offences wing in case of the private banks. So when that happens, naturally the what you call whoever is involved, the first thing the CBI and economic offences wing, I don't know, CBI looks at is whether there are any accountability issues in sanctioning, disbursing, all those aspects. That is the first thing they look into. So that way, COC members, I'm talking about mostly the PSU and the private banks, they are very conscious about these factors. In my own cases, after the RP, as RP or liquidator, we have filed or done the forensic audit report. The concerned banks have filed CBI complaints, and the charge sheet also have been filed. So in my view, that is not a, I mean, we should better focus on ourselves, and the COC would take care of it later. That is how I would put it. I think any other query which comes up, I shall respond when during the question and answer session. Hope this is of some relevance for the topic. Thank you.
Thank you, sir. Thank you so much. Before inviting the third panelist, I would request Ashish Makhija, sir, to make a special announcement from his side. Ashish, sir.
Okay, thank you, Anuji. Friends, I think I never wanted to barge in and take a break here, but I'm so happy, or it's a great pleasure to announce. And I'm taking this opportunity to announce the launch of my latest book now, which is Guide to Personal Insolvency Management. I think most of us are handling personal insolvency management cases, but we were short of the guidance. I mean, this book, I believe, would serve as a practical companion for the IPs who are looking at this very complex and evolving landscape of personal insolvency under Part 3. Now, this book gives you structured guidance. It gives you the templates, it gives you the timelines, and it also gives you the legal insights, which have been all curated from kind of a real-time professional experience. And this individual insolvency, I believe, is gaining momentum. The need for clarity, compliance, and of course, managing them efficiently becomes very, very paramount. So I hope, friends, that this guide will serve you as a useful tool for professionals and of course the thinkers, policy thinkers alike. So thank you for your continued support and I look forward to your feedback. I think on the screen, may I request that if the image of the book can be shown, or maybe we can share just give me a moment. Yeah, I think now, friends, you can see that. And friends, I'm also happy to announce you that on the transition website, when you go, you'll find this book. There is a pre-booking which is on right now, and there is a pre-booking discount also being given. So I think the book will be supplied to you within the next 7 days if you do a pre-booking now. And there is some discount also which is being offered by transition. So friends, thank you so much. I just wanted to mention that there is a launch of, the new book which has come today. Thank you.
Thank you so much, sir, and congratulations once again on behalf of the entire fraternity and all the participants who are here. Thank you so much. And now we move on to our third panelist, IP Ravichandran, sir. T.R. Ravichandran is a science graduate, fellow member of the Institute of Company Secretaries of India. He is a practicing company secretary, registered insolvency professional, qualified registered valuer for financial assets, independent director, and a social auditor. Experience of 42 years in corporate laws, corporate finance, and valuation of financial assets. He has held senior positions in large organizations, including ICICI Bank, Barclays Bank, Murugappa Group, Rane Group, Polaris, etc., and practicing in corporate laws, valuation, corporate finance, and IBC for over 13 years. Of course, IBC is just 9 years old, but related fields he has been practicing in for 13 years. Teaching is his passion and constantly teaching students appearing for CS professional course. He has published 6 articles in the Hindu Business Line and also in Chartered Secretary in the areas of IBC and corporate finance. Ravichandran, sir, we welcome you to this webinar, sir.
Yeah, thank you.
And you have around 10 minutes, sir, to speak on CIRP as a going concern.
Thank you, Anuragji. Thanks everyone, actually. And I'll just share my experiences in keeping the CIRP as a going concern. And also, I'll also give some suggestions, actually, because this is a group which is a elite group. And certainly, we will have a discussion and on that suggestions. Then we will, recommend it to the appropriate authorities. Now, going concern is not defined in IBC. In IBC, actually, only thing is that it's Section 20 of IBC mandates the resolution professional to take necessary steps to preserve and protect the value of the property and manage the operations of the CD as a going concern. And then if you look for Indian accounting standard, it says that the operations, is a going concern is an entity that continues its operations without the intention or necessity of liquidation in the near future. But then if we go to liquidation regulation, regulation 32, it says that CD can be sold as a going concern also. So therefore, we will assume that the business will continue its operations for the foreseeable future, and not to be forced into liquidation or cease its operations. Or in other words, we will assume that the operations of the company would continue. That is a simple thing we will understand actually. So why to keep the company as a going concern? Only two objectives actually: to maximize the value, and then we also feel that it will be more than the liquidation value. These are the two objectives of keeping the concern as a going concern. But then what are the challenges? All of us would have faced those challenges actually to keep the company as a going concern. The first thing is that the RP is entering into a black box actually whenever the CRP is ordered. There is no cooperation, no one to hand over any accounts or anything like that. No one, we do not know about the industry. And, the moment the CRP starts, the suppliers will not give you the credit. On the other hand, the debtors will not pay actually. Even during the CRP, what we have done is that when we have sold, they have been instigated by the promoters that not to give the money to the company to make the RP life miserable. This is I'm sure that most of us would have faced these problems in most of the companies actually. So we even if we sell the goods actually, we do not get the payment. That's the second thing actually. Third thing is that no, we are not the industrial experts, and we look for people who can manage the operations. But even if we bring the the people of operations actually, we do not get the quality people. Even the quality person comes actually, he is not sure that how long he will continue, and what will be his duration. All these doubts are there actually. So we do not get the people to manage the operations of the company. And the another thing is that the employees also start leaving the organization. Good people immediately they get the job because they don't want to be in the CRP company. They look for better greener pastures. They move out of the company. These are the difficulties. This one. Then of course the non-availability of interim finance also. We don't have anything. Even if you ask the COC says we don't want to put good money after bad money because they are not sure when they will get the money, and it's very difficult for us to get the interim finance also. Now, the RP per se, is not having the knowledge to run the organization and the costing and the industry and nature, and we do not know whether we would make a cash profit or not actually. This is another problem, which we have faced in all the organizations. Some of the organization, when we run the organization, we felt that the cash drain was happening actually in the organization by running the company, to keep the company as a going concern. These are the difficulties. This one. Then we also have as RP, we have the compliance burden also. Compliance burden is we have to keep make the accounts up to date. We have to file the returns actually, file the IT returns and other things actually. They complain. Of course, the routine GST returns are all fine actually. But if we are forced to do the past, clean up the past records, certainly that also delays the whole process actually. These are my submission in the challenges of what we all normally face when we keep the company as a going concern. So now, what are the recommendations, which in my opinion, definitely I leave it to the audience to discuss also. We will also answer we will also discuss during Q&A also. Of course, we have senior members who can definitely add value to these suggestions actually. My first suggestion is that keep the promoters away from the CARP actually. It's a debatable point, but then I'm here to debate actually, because all the keeping the company as a going concern, the main time of RP is spent on litigations filed by the promoters actually. So he has to jump from one to another. That is the first thing actually. The impediments caused by the promoters. Number two, actually, we do not know that the moment the CRP starts, what happens is that the debtors, the company's debtors do not pay anything actually, and the loans and advances, the company would have given a lot of money as loans and advances to outsiders actually. We do not get anything from that actually. And that is a major problem what we have actually. For that, my second suggestion is that there should be an order. I mean, the law should be amended in such a way that the moment a company comes into CRP, the advances, loans and advances which are in the current assets must be payable within a reasonable time. That's the second one. Third one is that the debtors also, whatever rising is there, certified is there, those debtors should pay the amount also to the company within, say, 30 days or 45 days actually. That would help the company in getting the money actually. Otherwise, what it should also happen is that if they do not pay actually, that amount must be disallowed in their books of accounts. That is the debtors books of accounts actually, that amount should be disallowed. Income tax disallowed should be there actually, and heavy penalty also should be there. And the auditor of that company, that is the debtor company or the loans and advances that company actually to whom we have made, they should certify that there are no dues to companies which are under CRP. Just like that today, what we have is that there are whether there are dues to MSME companies. It is very easy actually, because CRP companies, the list can be published actually. The auditors can check whether there are any dues to CRP companies which they have not been paid actually. This one amendment will ensure that there is a money flow is there to the CD actually. That amount can be utilized for paying up the current liability. Current liability in any ratio, any agreed ratio, be it from the financial creditor or operation creditor actually. That is my third suggestion actually. Only thing is that the company, the first thing is that, and another thing is that within the first two meetings, the RP should decide whether at EBITDA level he is making profit or not actually. Then he should go to COC. COC should be in a position to give the direction whether to run the whether to keep the company as a going concern or not actually, not to drain the cash resources or this one. I mean, we should see the impact of stopping the operations also, because it is not necessary to keep the company as a going concern and drain out the cash resources. These are my suggestions. I think I'm well within the time. We will discuss again during the Q&A. Thank you.
Thank you, Ravichandran sir. Thank you so much for your inputs. Risham sir, you're ready, or should we?
Yeah, I'm fine. Thanks. Yeah.
You're fine. Okay. Friends, now I invite the fourth panelist for today's webinar, Dr. Risham Garg. Dr. Risham Garg is a professor of law at National University, Delhi. He is also Executive Director, Center for Translational Commercial Law, CTCL, Center for Incubation, Innovation and Entrepreneurship, CIIE, and Director, NLU Delhi Foundation. Professor Dr. Risham Garg holds a Doctor of Laws, it's called LLD, and doctoral research degree for his work on international commercial law and arbitration. He is currently engaged in research and teaching courses of corporate insolvency and bankruptcy laws, seminar, regulatory practicum, insolvency, securities, competition seminar, transnational dispute resolution seminar, technology and entrepreneurship policy, legal writing and business law research methods to the PhD research scholars. He has recently been working closely with the IBBI by providing valuable consultancy support and also towards the continuing professional education for insolvency professionals. Dr. Garg received the NLU Utkarsh Award for Excellence in Teaching and Research in 2023. With this introduction, I invite Dr. Risham Garg, sir, to please share your views. And your topic is, sir, simplifying and strengthening IBC.
Thank you, IPNet, and thank you, Anuradha-ji, for this wonderful introduction, kind introduction. And I have seen the schedule, and thank you for your questions also. So I believe I have around 10 minutes to make some of my points. Right. Thank you.
Yes, sir.
I'll try to be on time. So the first, is very generalistic, but still, there has been a lot of discussion, and it is an endemic situation. If we consider whether, from policy perspective, whether the insolvency and bankruptcy code is becoming overly complex, and what can be simplified without compromising the robustness. So it's not that it is overly complex, and the several countries, there are instances that even in 1 year there have been multiple amendments. So it's not the case only in India, and it's hardly 9 years till now the IBC has been operational. And even if we've had amendments, sometimes even twice in a year, but in some countries there have been 20 amendments in 20 years. So that does not matter. So the as the way as we proceed, the issues will crop up. It has to be resolved. Certainly, there are some complex issues, and there are certainly some areas for simplification. The first element certainly is on the tribunal efficiency. The delay in tribunal proceedings remains certainly a big challenge. Nowadays, the digitalization and use of AI and technology can streamline these court processes. Apart from that, streamline appointment processes for the tribunal member will also go a long way in increasing the efficiency. Along with the tribunals, the other support members and their capacity also will really help. Apart from that, there are measures like prepackaged insolvency, expanding the prepackaged insolvency resolution process from the currently the which is applicable only for the MSME to all, focusing increasing it to the corporates also, may certainly add. We are reducing the burden upon the tribunals, and that is certainly the reason why the mediation proposal for Section 9 applications have been proposed. So, use of mediation, use of alternate resolutions, and also increasing the resolution processes. Then, stakeholder coordination, mandatory creditor meetings, and better alignment between the corporate and the personal guarantors and the insolvency frameworks certainly will increase the coordination. Then, regarding the asset liquidation, simplifying the liquidation frameworks, reducing the reserve price restrictions, ensuring greater stakeholder involvement in the asset sales could enhance the recovery rates as well. Then, as far as the regulatory overlap is concerned, that to consolidate the overlapping regulations and reducing the redundant compliance requirement could make the process more accessible. The government has undertaken a tremendous exercise to do away with the redundant laws which are no longer, which were old archaic laws, no longer operational. They should be done away with. Even measures like decriminalization of corporate law measures. So all of these time to time is very relevant. Then another point that I would like to point is that as I really mentioned about the MSME. So how much can IBC borrow from the global best practices, such as the pre-packs or the mediation models? Now, the pre-pack has been introduced for MSME, but it can be introduced and it can be increased to this logical conclusion, which is for the corporates. The IBBI has come up with the mediation proposal, which is a bespoke mediation proposal for resolving the Section 9 applications. There are so many issues, and now we have the commercial courts. The functioning of the commercial courts can be taken into consideration. They have a efficient court management. And what are those stages? How the commercial courts are managing the pre-institution mediation settlement systems. So that can be taken into account to incorporate and inculcate this mediation and the ADR mechanisms to streamline the insolvency process. Apart from that, very interesting and very crucial is to increase the number of insolvency processes. At the moment, we have only two insolvency processes, which is the insolvency resolution and liquidation for the ordinary corporates. Additionally, there is the pre-packs for MSME, and that is sorry. I think there is not sure. Uh, Sorry. Yeah. So sorry about that. There was something on my screen. Uh, Sorry. So we have just two insolvency processes for the corporate insolvency, which is the insolvency resolution and liquidation. And pre-pack is only for the MSME. However, in most jurisdictions, there are several insolvency processes, like schemes of arrangement in Singapore, even in UK. And apart from that, administration. There are several insolvency processes, and gradually we can understand how those and inculcate into the IBC process. Apart from that, uh, so I mean, if I have to discuss on what is the view on the role of IP should be expanded into the institutional advisory or policy inputs, well, certainly that will be very helpful. Expanding the role of insolvency professionals into institutional advisory and policy inputs could certainly enhance the insolvency framework by leveraging their expertise in the financial restructuring, the legal compliance, and the stakeholder negotiations. However, this shift would require careful restructuring to maintain independence and avoid conflicts of interest. Then, moving on to my last question or topic, which is post this BPSL case, do we foresee greater judicial scrutiny on conduct of IPs and the COC? Is this a welcome shift? There are a lot of comments on the BPSL case, and they will continue. It is sort of a landmark case in several aspects. So this recent Supreme Court ruling in the Bhushan Power and Steel case has set a precedent for greater judicial scrutiny on the conduct of insolvency professionals and the committee of creditors. Now, the court's decision to overturn the resolution plan and order liquidation signals a shift towards a stricter oversight of insolvency proceedings. Although have been several decisions where, for mere procedural matters, the commercial wisdom of COC will not be considered. So, the commercial wisdom of COC will not be looked into or interfered into by the judiciary only for procedural irregularities or procedural matters. However, despite there is a sanctity to the process, and in the BPSL case, at several stages, or let's say every stage, there were procedural irregularities. The process was not followed, apart from the violation of the substantive law provisions as well. So if we look at, well, there was a resolution, there was a delay, and the resolution plan was approved. The successful resolution applicant paid the money. The SRA was given control of the company assets. They were running it. The company was profitable. The CD was restructured. It became profitable. And through the time, the case was pending. And after the decision, suddenly it appears like a bolt. How liquidation? Well, so we thing is that, I mean, if it may not be a correct, uh, comparison, but even in case of irregular constructions where there are several buildings which are constructed and they have been irregular, we have seen several places in Delhi, Noida, builders, the buildings were constructed flouting all the regulations. Well, they have to be brought down in several coastal areas also. If there are grave irregularities, the court cannot sanction. There may be several people, but well, there has to be a sanctity of law. So there needs to be a balance which has to be evolved. So I will not say that there is a welcome shift, but yes, some balance, harmonization needs to be prepared. Yeah, thanks. I believe I have I have completed these topics which were given to me and within the time provided. Thank you.
Thank you, sir. Thank you so much for your inputs. I request all the four panelists to be available for us to answer the questions by the participants. So may I request all the four panelists to switch on their videos and be available for us. Dr. Risham, sir, I will start with you itself. See, you had said that there are only two processes right now for a normal company, which is CIRP and liquidation. But sir, we do have a scheme of arrangement under Section 230, or even company can be sold as a going concern during liquidation. So we do have those two processes also. So how do you see this? I mean, is this not enough, or what else can be bought for normal companies also, other than MSMEs?
Yeah, so actually the thing is that actually scheme of arrangement as it exists today is not IBC process. It's not an insolvency process. It's a corporate law process. Uh, Even though IBBI, in a regulation, they have mentioned that scheme of arrangement may also be considered, but actually scheme of arrangement, it does not figure part of, and again, the definition of a scheme of arrangement, sorry, the definition of a resolution plan says that anything and everything is possible, but that is not how, we want a resolution plan. So scheme of arrangement becomes a part of a resolution plan. However, what other countries observe is they have separate resolution, they have separate insolvency process. Here, scheme of arrangement is a part of the resolution plan process. So that is what we need to understand, how to distinguish between how to expand the types of these insolvency processes which are substantively in, incorporated into the code itself. For example, there is a resolution plan, and there is a pre-pack, and there is a liquidation. So liquidation is one, and then how
I think Garg, sir.
Anuji, you can take over. His screen is frozen. Maybe there is some glitch.
Yeah.
Yeah.
corporate law process, and we should be very careful in including the other legislations remedies into the IBC. So somehow some harmonization was tried to be done. However, the Supreme Court decision in Swiss Ribbons by Honorable Dr. Justice Chandrachud was very clear in this respect. So if we look at Singapore, UK, and other countries, they will have several type of insolvency processes. That is what I was indicating towards.
Okay, thank you, sir. Sanjeev, sir, do you want to talk on this, where they say that the other countries have other insolvency processes? So, do you want to share your thoughts on that?
In case you can just help me with the repeat of the question, because I could have, I had a lot of disturbance for a while. So I was tampering with my thing, but I couldn't get the right hold. Okay, can this question be
No
repeated?
problem. Yes,
Yeah.
sir.
I'll
Sir, actually,
let me. So
yes.
so the question was posed by me
Yeah.
that out my view, it was basically not a question but my view that the IBC has only two insolvency processes, which are the resolution plan and the liquidation for the corporate persons. Only for MSME, we have an additional insolvency process, which is the pre-pack. Apart from this, there is no other insolvency process under IBC. However, other countries like UK, Singapore, and several countries, they have several other insolvency processes where the scheme of arrangement is also an insolvency process. There is moratorium, administration, several other insolvency processes as well. And it will be very helpful if we can also expand the number of insolvency process under the substantive law of IBC. The scheme of arrangement to be considered as a part of a resolution plan is not very helpful, and there was a clear observation by Honorable Dr. Justice Chandrachud in the Swiss Ribbons case that in the that Gujarat NRE Coke case, that scheme of arrangement, when the promoter proposed in the liquidation, is a corporate law process, and we should be very careful in including these corporate law processes into the IBC. So that was, I think, the
Fair point. Fair point.
proposition.
So I definitely have, a small view. First of all, the right thing done the right way. So even the Section 230, the scheme of compromise, the way it was added to regulations, uh, it was a patchwork, right? I mean, there was an intent to save the company. And that is very peculiar to India, that we do not want companies to directly go to liquidation, irrespective. Initially, when the law was not even amended, then the first and the second meeting, the COC can actually take a direct call to liquidate the company. Right. So the idea was that under no condition, irrespective, whatever happens, we should give it a fair shot, a fair chance to the company to see if there's anything which can be salvaged, if it can be resolved. So that showed the intent of the legislator, the policymaker, which is absolutely okay. Now, the larger intent was that can we save it, but at what cost? That was the second question which begged an answer. And then eventually we had a lot of legacy companies or zombie companies we had, and we have seen RPs and the COCs really spending a lot of time fully knowing that nothing will come out of it. And with passage of time, the value of the assets further deteriorates and all. So from that perspective, there were amendments required. But Dr. Garg, if we see from a position from what we had, initially the pre-CRP, the pre-IBC regime, which was more on the lines of Chapter 11, the US mechanism, we moved because we were not happy. We moved to something where we saw UK is having a creditor control regime. Maybe that'll work. And eventually we figured out that after 8 years, we are having, some issues, some loopholes, some challenges. So to me, the best idea would be to each his own. India has always behaved different as a country, as a society, as an economy. So it's always good to get inspired, but maybe a copy and copy paste kind of a situation may not be relevant. Yes, I heard you saying about, speaking about the mediation, about the pre-pack. So these are enablers where we figured out that something which was laid in law as a code, eventually they tried to help through regulations, but in spite of that, when we were not getting the desired results, something more had to be done. And hence came the PPIRP, and hence came the exceptions for the MSME, hence came the mediation as an enabler. But the entirety of it, if it has to be seen, the larger objective is, can we save the company? Right? Can we resolve the company? And that what I said in the initial remarks was, let's also have a small debate on resolution versus recovery. We might be saying anything, the premise of IBC, what we write in the script, what we read, what we tell the world is one part. But in reality, let's speak about the stakeholders. The stakeholders who sit there right from the banks to a HNI, to a fixed deposit holder, to a NCD holder, and now even a home buyer, they are concerned with their asset, their recovery. There has to be a bridge somewhere in between. I cannot be saying resolution, but then I end up agreeing to them, which is the COC. All it wants is they have to go back to the committee and the boards, and then they say, how much have you recovered? Your evaluation matrix today are talking about highest value and the earliest who can give. How can this be resolution? There has to be a bridge in between. There has to be some balance in between. So whatever we do. So, okay, the shorter answer, of course, was that even if we have a CRP or a liquidation at two modes of resolution under IBC, and then the enablers like PPRP and other thing. But till the time we are not plugging on the loopholes and the expectations of the stakeholders, we'll keep faltering some with other. Because this to me is a patchwork. What IBC apparently after 8 years, with all this discussion happening, requires an overhaul. Maybe the timelines are an issue. Maybe there's a competence. Maybe we have not been able to address the requirements or expectations of various stakeholders. Today, authorities are still after us. After the CD, after the RA, in spite of government being very clear that the ground debt will be much lower. But during the CRP, post the CRP, they are after, after the RA. So has the message been sent across clearly? Has it been understood clearly? Are we also debating on the competence of, the professionals, the practitioners? The recent Supreme Court judgment has actually come out with, that there has been an issue at every stage with all the stakeholders. Now, if that be the case, doesn't it lead to a larger question? Have we all misunderstood, or have we not properly understood what needed to be done? After 6, 7, 8 years, if the basics are being discussed, and it is shaking the very foundation of our understanding with regards to IBC. They've figured out problems with IP, with NCLT, with NCLAT, right? With the COC. Who's left? IU, of course, one of the pillars, but otherwise, every other pillar has been challenged in terms of their performance. So the larger question is, whatever we had in law, whatever was scripted, has that itself been properly understood? Has that been applied properly? Or we require a tweak? Do we need to go back on the drawing board and say, no, no, guys, right from 180 days, what was a very ambitious plan? And today also, if your average is 550 or something, one thing is clear: you need at least one full business cycle to understand what is impacting the business, a particular CD. The best of the IPs with their best of their teams and the council, they also need some time to understand, get a grasp of the CD if they have to manage it as a going concern. So my first question starts from, what about the timelines? What about the competence? And the form taking over substances, because everyone wants to be on the right side of the law, irrespective if the outcome is exactly what we expected or not. Your value is diminishing. The banks, we have heard, I mean, I was attending some other program and I was told, I heard that the banks are saying that, IBC is not yielding what it was supposed to. Now, it was primarily the twin balance sheet problem which we had to address. The banks were the biggest beneficiaries. If they are losing confidence, then there's something grossly wrong. So there is an issue of timelines, there's an issue of certainty, there's an issue of expectations, there's an issue of recovery versus resolution. These are issues. Does it require a patchwork, or we really need to rewrite the IBC somewhere and say, guys, let's take a clean slate, clean board again. Let's start. Maybe then we compare with what exactly we did, what we achieved versus what should have been done. Maybe it's a comparison which is worth our effort. So otherwise, commenting on smaller aspects of what else can be added. And also, as I said, the right thing to be done the right way. If the scheme of merger or compromise had to be inculcated or incorporated in IBC, then it should have been rewritten with regards to IBC through the regulations. We cannot say, look at section 230 and then apply in the first 90 days. It's just not adding, it's a patchwork. People do not properly understand. They give it a shot, but then without enough confidence. I think in 230, 75%, of all the creditors somewhere have to say yes. They have to agree. Now in a COC, it's only 66% of only financial. If a CRP has failed, that means 66% of only the financial have not agreed. How can we expect 75% of the total entire creditors of the company to agree to something? And they are still outside the system. And they've seen the CRP getting failed. So somewhere these were attempts in a haste to try and achieve an objective. Maybe in the larger scheme of things, if it has not been achieved the way we thought, I think high time we need to have a relook, but a proper relook. Let the right thing be done the right way. Maybe once again, 8 years, I understand, not a short time, not a small time for us to learn, but maybe we couldn't unlearn a lot before we were to learn, the new things. So that's what it is. That's my view, by the way. Thank you.
Yes. Thank you, Sanjeev, sir. Sir, you had said that a place for everything and everything in its place. The same thing goes for a time for everything and everything in its time.
It
So
does.
in the backdrop of Bhushan Power and Steel, yeah. So how do you look at that, sir? Because the timelines certainly were not followed, but they couldn't have been followed. So, sir, there are certain unavoidable delays or avoidable delays by the COC and RPs. So, do you think there can be a deterrent necessary for the COC members or the RPs where there are avoidable delays?
Is this for me, madam? Hello, is this for me, madam? Hello, should I?
Yeah.
I can't.
Yes, sir.
Yeah. Please go ahead,
That's
Sanjeev.
fine.
I think there was a small technical glitch, so go ahead.
Okay, no issues. Okay, so there's enough which has been
sir.
spoken.
Yes, sir.
Right, there's enough which has been
Sir, it's for
spoken.
you.
Okay, ma'am, thank you. I'm saying there's enough which has been spoken by many experts who apparently, have gone through a 105-page order many times over. People have picked up various aspects of the order, and I have been seeing for last 4 years, 5 years, IBB has been grappling to put a code of conduct, a COC for the COC. Now, let's again understand COC is a heterogeneous body. When we speak about COC, we end up thinking only PSU banks sitting there. Of course, they are the biggest stakeholders. Okay, more often than not, they are the people who drive the show. I otherwise agree, but it's a heterogeneous body. There are days when unsecured creditors have actually, I'll use the word hijack the process, right? There are situations where secured creditors have been left lurching in the dark because unsecured creditors could have their way. There are days when secured creditors thought that they are better off in a liquidation because the resolution plan is not giving them the justice or the fair treatment the way it should have been done. So COC is a combination of so many people, though we say banks, but a private bank behaves differently versus a multinational versus a PSU. They have to go to their committees, they have to go to their boards, they have their own internal norms to agree, their own balance sheets, their own targets. Now, IBA is okay, RBI is fine, but at the day, it's the bank's call. And when banks are sitting with their own varied objectives, then slightly it becomes difficult to try and tame them or give them a code of conduct, which they'll probably take it as a Bible. So that's been one concern. So it's always easier said than done that COC and IP should be further brought down to some kind of a rules and all, because I don't see COC really kind of getting on that, but everything will then fall back upon IP, who's a face who you can recognize, who's a person by name you can pick up, but the rest of all other are organization institutions. So let's slightly be fair to the process, understand what can't be done, what can be done. So there has to be enough flexibility somewhere in the process. Let not the form take over so much of importance that we are losing out on the substance. To me, one thing is very clear, ma'am: 180 days, 270 days, 330 days, right? This is not a good time to really justify and be fair to the process. Initial
Right, sir.
days, I remember having a discussion with Dr. Sahu that stage, and he said, if you do not put a deadline, it'll go on and on. I mean, that point in time, we all understood, we agreed. But big companies or companies which are, and any business requires some good understanding, even for a professional like us, who, in spite of the best of the teams and the intent, we'll all struggle to understand the business. We would need to be in the market. On one side is the compliance, on other side is running the show, and the best way possible interacting with all the I would say complexities, because the typical CEO or MD of a company, when he takes a call, right, the environment is a conducive environment. Here we are working against odds and working, it's a race against time. So my simple one smaller suggestion, which eventually can be further debated, is should we look at the timelines? Because 180 days you need to run through the CRP and then keep dragging it by pleading, by somehow always seeking requests and permissions. But on the other hand, for someone to decide and evaluate, it has taken years together. So if somebody is wrong, penalize him. You cannot turn the clock back. There's actual money involved. There's a commercial law. Money has flown. A lot of water has undergone the bridge. So let's be fair to the process. These are contracts being made. If we go back on the contracts, then I think we are not setting the right precedence. The message which is going outside is not a good one. So that's from my
Thank
side.
you. Thank you, sir. May I now pitch in Ravindra Belur, sir? Sir, you had spoken about Section 244 of Singapore IBC and Section 300 of New Zealand Companies Act. Sir, how do you think these can be brought into India, IBC 2016? Where do you think this can fit in? Because you have spoken about, the non-cooperating stakeholders are being arrested. Okay, they are made liable to produce the books of accounts, and they have to keep the books of accounts up to date, even up to the liquidation date. So how do you think we can inculcate this in IBC?
I think this should be something to do with the governance. So as a result, this may have to come in the Companies Act itself. That is how I would look at it, because these are the governance issues. As far as the IBC is concerned, there is it is 66 subsection 2. It has in some ways connection with the 66 subsection 2. My thinking was that the Companies Act as it stands today, if somebody does not maintain the books of accounts as such, I'm not an expert on Companies Act, but this is what I recently saw, and the penalty is something like 50,000 to 5 lakh. So when the companies are using the public money, and most of the times companies get close to avoid paying GST and other taxes, there should be the maintenance of books of accounts and getting the accounts audit is basically it's a governance issue which should get similar to section 300 whatever I shared. It should be there in the Companies Act, and that would help in getting the cooperation. This will not happen in the next 6 months, 1 year, 2 years. This is a long term. Maybe in the long run, we can see the impact. This is how I was looking at.
Sir, if that happens, there is no question of insolvency at all, right?
It not necessarily. Insolvency, insolvency will be there always, but
we don't have to struggle for 19(2) applications in NCLT, non-cooperation of promoters and all.
Yeah, but there is one interesting judgment I have seen connected with the section 66 subsection 2, wrongful trading. I am not remembering the exact name of the case. I think it must be Royal something, which is an NCLT decision upheld by the NCLAT. It was interesting to see in the judgment, which said what is wrongful trading. They took one of the UK judgments in that, and there they said not maintaining the books of accounts also as a part of the wrongful trading. So, but if the benches can take that kind of radical view, even if you go to the basics of section 66 subsection 2, it may serve the purpose, but otherwise it is difficult. As far as the non-cooperation is concerned, what we call January 1st, the commencement of CIRP happens, and you file non-cooperation application, and then nothing happens till June. In my case, fortunately, I shared already that even in the first hearing, it was disposed of with a direction. That is what it should happen. So, in my view, this if you bring section 244 or 300, it would be a deterrent in the long term, may not serve the immediate purpose. And that is how I would look at it. And I shall share that particular judgment in the chat box in another 5 minutes or so.
Sure, sir. Thank you, sir. Ravichandran, sir, over to you.
Yeah.
Sir, you had spoken about CIRP as a going concern. Now, sir, can you broadly elaborate onto who is responsible? Suppose the CIRP is not as a going concern. Who would be responsible for the failure to run the company as a going concern? Is it the COC? Is it the RP? Or is it the ex-management?
See, CIRP is not running. Just a minute, sorry.
Sir.
Sorry. Now you are saying that who is responsible? Actually, ultimately the axe will fall on the RP only, because RP is not the soft target. Actually, the thing is that's what I have done in my earlier assignments. Actually, what we have done is that we have run the company successfully. Also, we have also stopped some of the operations. Mainly because what we have done is that we have taken that whether the company is able to make EBITDA level positive actually, or rather that we are not out of cash by running the company actually. If that is the case, actually, within 2 to 3 months, we take a call, we go to the COC and then say that this is what we have done. Actually, this is what the support we require from the COC. And the COCs have agreed, actually. Some of the units we have closed, some of the units we have leased out to somebody else. Actually, we have done that so that, the company is not having any cash crunch, actually, because we can't get any funding from anyone.
Interim finance.
That is the stage in any CRP company. So these are the things which we have done to ensure that the company floats actually and the employees are intact.
Okay, thank you, sir. Now I request the participants, if you have any question to the panelists, probably you can ask directly, or if you have posted in the chat box, we will take it up. Anybody who wants to ask directly can unmute themselves and ask, or else we have a lot of questions to ask the panelists. Anyone? Okay. While on that, sir, this is to all the panelists. Maybe one by one, you all can share your views. Sir, in the background of Bhushan Power and Steel judgment, which is there, do you think the COC decisions have to be reviewed on the grounds of irrationality or failure to consider critical commercial aspects as it happened in Bhushan Steel? Garg, sir, we can start from you.
Sorry, you want me to address that first?
Yes, sir. See, even COC has been commented upon by the Supreme Court. So do you think even the COC decisions should be, at some point of time, should be reviewed, whether they have followed the commercial aspects of it or not? Because the commercial wisdom, the so-called commercial wisdom of COC was never to be questioned. But now in Bhushan Steel, up to the Supreme Court, they said that you have not taken the right decisions.
I think the ball has been put to rolling by Mr. Ahuja. So Sanjeev ji has mentioned, and time and again, it has been voiced that there is a need for now COC. I mean, there has always been felt a need for a COC for the COC, the code of conduct for the COC. So the code of, and in my, I have written one article which was published in the American Bankruptcy Law Journal, which was in the aftermath of the SR Steel 2019. American Bankruptcy Law Journal, which is published by the American Bankruptcy Judges Association. So there, we have highlighted that the COC functions at that time, it functions in a very opaque manner. Even now it functions, we should be able to say in an opaque manner. And so now what is what is the reason why the commercial wisdom of COC has been recognized? So the purpose of specialized tribunals is that the judiciary, the courts, which are non say sort of specialist judges, or let's say when there is our commercial uh, parties, their decision should be honored, right? So leaving those commercial matters to the COC, because there can be several matters, and it may be that our code may be for a namesake, but it is a skeleton code, and it still does not have those details. If we compare with other codes like the US code, they have detailed provisions, detailed situation which cater to nearly every type of a situation. So certainly there is a need for a code of conduct for the COC. Now, as far as the judicial review of the COC commercial wisdom, that may open a Pandora's box. So as a one of measure applying a review under Article 142, because there have been glaring inconsistencies. So as the several occasions the NCLAT and Supreme Court has also mentioned that usually the COC decisions should not be reviewed in procedural matters, but only when there is a abuse or violation of a substantive law provisions. So that has been the benchmark that we have been following. But in this Jindal JSPL JSW case, Bharat Bhushan Steel Power case, there have been several procedural lapses at nearly every stage, which has warranted that, well, the sanctity of the process, the sanctity of the law must be maintained. So, what I would want to say is that this has woken up our eyes that there is a need for reforms. But you, as in the IP community, you would know that whether this situation which has been highlighted through this case is endemic in the situation, or is it a one-off case? If it is a one-off case, or usually the processes are followed, then we must consider that it's a one-off case and may not be taken so in adverse manner. The situation warranted, so the decision has been made. But the commercial wisdom of the COC, all matters cannot go to the NCLT. So matters have to be left to the COC to decide.
Sir, exactly my point. Ravinder sir, I would like you to pitch in here. Sir, had it not been for appeal to Supreme Court, okay, all the decisions of NCLT and CLAT would have been final. So after going to the Supreme Court only, all these issues are coming out, and now the elaborate 105 pages judgment is there on this. So had it not been overlooked at those two stages, and once have the approval of the adjudicating authorities and the appellate authorities itself. So do you think there is a reason for us to question whether these are final orders or not?
I mean, I would only say from whatever the order I have read, even if the commercial wisdom is there with COC, in my view, when the COC has taken a decision only to negotiate with one of the three players, it is not with the 3 of the 30 players, it was one of the 3 players. I think RP should have, I think, stopped it, and he should have made it. I mean, similar case has happened with me. We have given the negotiation with all the players, 2 or 3 players, and we have made a transparent. We had made a transparent process where they have to give their closed bid within a certain period of time, not dealing only with the one party. So, in my view, there is the process, as far as the conducting of the process is concerned. I think RP should have been more cautious, and he should have guided the COC, saying that this is not the way it should be done. It would be done from a more transparent manner. That is how I would look at it. And I also think, as Garji put it, in my view, this may be a one-off case, not that all 70-80% of the cases will be happening like this. That is how I would view it. And RP's role also is there when I'm talking to this particular judgment. If what was supposed to be infused as an equity, it was infused in some other manner, he had every duty to bring it to the consideration and maybe take it up and ask the ex-COC to take an appropriate decision. And similarly is the case when there is a huge delay happening. How can RP as a monitoring agent keep quiet? I mean, these are the questions come to me. But I am an optimistic person, and I think this could be a one-off case. There may be, I mean, I don't say there is all other 99 are like this, but it may not be all 88% or 80% of the cases would have been done in this manner. That is how I would put it.
Thank you. Thank you for your input, sir.
Okay.
Sir?
Anuji, if I can just barge in.
Yes, sir.
I have a small question to all I think the panelists here. Now, the question is, which is coming to everyone's mind, which is typically a conceptual question rather than going into smaller items. Now, the question to all participants, maybe all panelists, maybe they can spend 1 or 2 minutes on this. Has the IBC become too procedural and compliance heavy? And second is related to this is it a time for a light touch insolvency framework for such kind of cases, particularly the CIRP and other individual cases. So the question is, has it become too procedural and compliance heavy, or is it time for having a light touch insolvency framework? So it's for all panelists.
We can start from Ravichandran, sir.
Yeah, it has become too procedural. I think certainly, that's what I always say actually, that dealing the litigations, let the RP concentrate only on bringing a resolution plan, and they let the company go into liquidation at the earliest. Actually, the disputes regarding the the distribution type litigations actually can run parallelly, so that the the resolution plan can be brought in quicker, or the realization also can be quicker. I think by asking RP to do more and more procedural aspect is only delaying the whole process. That's my humble view.
Ahuja, sir, over to you.
Delinking is a key. Yeah.
Yes, sir.
Okay.
Thank you.
Sir, again, a radical suggestion. I mean, that's what I want to do, so that something can start moving. Maybe 2 IPs required going forward for a CRP case, especially when a CD is a going concern. One should be dedicated for the compliance. Other should actually work on maintaining the company, ensuring it's a going concern, interacting with the resolution applicant, and looking at the maximization of the value, because otherwise the form has overtaken the substance. So much of time, so much of effort goes into the compliance, and today is a fear factor. If you don't do, there is you can be debarred, there'll be a penalty and all. Now this fear factor, on a professional who's been 15, 20, 30 years in the profession, it kind of, it's stifling the creativity, which is important, because at the end, you need transparency, but you may not have consistency. It's not that one size fits all. A Bhushan Steel, a SR Steel, I handled MBL infrastructure. First my case, which was listed company, infra company. Eventually, people who are still aware of it, it's gone to Supreme Court twice. Okay, so there would be complications. No one size will fit on. Why don't we have some creative thinking and say, okay, and there are people who are happy on compliances. They are saying, we are IPs, we are great. मेरे सारे form भरे हुए हैं. Everything is stitched. Company, yeah, I wish I would have more time. I could have done this, I could have done that. But this took a lot of time and effort. And nobody wants to take a chance. And rightly so. So yes, it has become too prescriptive. Maybe initially because of, we have got all learning, but today is a time when we really need to look at an alternative. We are not saying we should let go of the transparency or the record keeping or something, but let us maybe identify people who would want to work as a team. One guy exclusively looks at compliance, the other guy looks at the rest of it. Maybe it just might, do some trick. So that's one. But if you allow me, I'll take a minute only on the previous question, which was important with regards to the COC's commercial wisdom. What exactly is commercial wisdom? Are we saying that only the people who lend the money, they understand the numbers, they understand the revenue, and how the money was used, from where it will come? If that be the case, let's respect that commercial wisdom. So commercial wisdom will come from the people who understand commerce. And if we have to review them, who should be reviewing it? Is the commercial wisdom of the COC, of the bankers, of the lenders, of the professionals who are sitting, to be reviewed by NCLT or by NCLAT or by Supreme Court? Or maybe we need to have a mechanism that, they have a further committee who can probably, on a test check basis, they can actually ask questions. If you did this thing, why did you do this, not do this? Some kind of a reference, some kind of a response mechanism. But for a judiciary, for the courts, for the tribunals, the main idea was to ensure that the law has been properly applied, the legal rules and the regulations have been properly applied, the procedures have been followed. The commercial calls have nothing to do with, the gaps which have been left. If at all, in the forms or the processes, if at all, if at all. And ma'am, still we are discussing a 105-page order, which is the Supreme Court's final order. I am sure there's a perspective out there by the RA, by the COC, and by the IP that we did this. Maybe it's not got captured, not got recorded. Otherwise, at that senior level, a Jindal Steel and a RP at that level with best of the consultants and the legal counsel available and the COC with the SBIs of the world and the PNBs of the world sitting there, would they want to look at shortcuts? Are they not concerned that tomorrow they can be hauled? So I'm sure there's a view which we are not privy to for now, but simple point is commercial wisdom has to be the wisdom of the people who understand commerce better. Okay, so from that perspective, somewhere we need to give them the benefit of doubt. I mean, let's not start with that thing. And to the point made by some people that okay, let's assume it's hope that's one-off case, but the one-off case cannot be the top case, one of the dirty dozens. The world has looked at us. We started our IBC with those 12 cases. If one of them faces this kind of result and outcome, then there's a lot of learning and unlearning which we need to do. We're sending a message to the world in this case. So that was important. Thank you.
Sure, sir. Thank you. Sir, while on that, we are still awaiting if there is any review of the order, and then probably all these discussions will die down. So let's wait for that. Dr. Garg, over to you. Could you share your thoughts on this?
Yeah, thanks. Thank you, Dr. Makhija. Wonderful question. And Sanjeev ji has already given his views. And he has also indicated about the way forward for the light touch regulation. See, the light touch regulation is a step-by-step process, or we have to achieve a certain stage when there is, let's say, some fairness. Okay, so if there are apprehensions by the market participants, or let's say there are regulatory, let's say the regulatory authority, let's say industry associations are managing some regulatory norms, or there are industry associations, self-regulatory associations in some matters. So like the competition law, the new digital competition law. So India is progressing towards light touch regulation, but successively in a particular field where there are more, mature, let's say, ecosystem. So there are in insolvency there are too many players, and apart from that, the bulwark of the insolvency process rests upon the insolvency professional, the resolution professional, the liquidator, and there are variable, standards, capacity, and again, so that is the main problem in achieving a light touch regulation. So the IBBI can have a light touch regulation, but then if again the question will be, there will be several people who are happy to game the system. Even now we hear that there are so many people who are gaming the system. So how do you stop those people? So there is always a challenge between the regulation and over regulation, and we have to reach a optimal level, and that level is reached when the particular economy is at a particular level. So yes, certainly, I mean, I tried to articulate my views. I hope that was relevant. Thank you.
Thank you, sir. Ravichandran sir, could you quickly add your views to this question raised by Dr. Makhija sir?
Yeah, that's what I said. The one is that I would like to hear from others also that the main obstacles what we have faced. I'm sure that most of us faced is that the promoters' intervention throughout the CARP. And why I'm harping on this again and again is that the promoters have already been given a chance to, come back to the company. There would have been a restructuring of loans. They would have given a lot of opportunities to, to make the company as a profitable one and to repay the debt. The banks or the COC members would have exhausted all their possibilities with those promoters, and finally they would have come to a decision to go for CRP. again to bring the same promoters again into the system, actually, that causes a lot of delays in the CRP. This is one, actually. The second is that I've been harping on this delinking of the entire thing, because today RP is unable to concentrate on the core function of bringing out a resolution plan or realization of money. These two, in my opinion, are very critical amendments which need to happen, actually. And the third one which I am harping is that the moment the CRP is there, where the collection of money from the, realization of current assets become a big problem. This is where we require sort of a support. This is the third one, actually. The fourth one, what I feel is that we need some interim finance, actually, where I have also faced a company. I was a RP of a company, actually, where there are only operation creditors, and the company did not have any asset. The company stopped production before 80 years, actually. So there was nothing except the land. So in those circumstances, we were really looking for a sort of a interim finance from this one. Unless there should be some sort of a government support to get that interim finance, actually. Okay, that can be, on top priority basis, that can be repaid. But this also a critical one. These four are critical one, in my opinion, to make IBC a successful one.
Thank you, sir. Thank you. Quickly, can I have Ravindra Belur, sir, to just give your thoughts on this?
Yeah, I think I will. My thought is that yes, more and more it has become compliance oriented, and also, unfortunately, regulator thinks that if they find some problem in some inspection or some investigation, it may be exception. There will always be exceptions. When they see exceptions, they are too ambitious to find that they think that there is a solution for each and every exception. This is where the issue is there. So as far as whether light touch is possible or not possible, I think I more tend to agree with Dr. Risham Garg. It is not easy for a light touch for IBC kind of matters, and I think the ecosystem need to mature much in line with Gargji. I think I endorse it, and that's all what I want to say.
Thank you. Thank you so much, sir. Thank you to all the panelists. And it was my pleasure to moderate this session. Over to you, Harmeet. Thank you so much.
Thank you so much to the panelists, to Dr. Makhija, first of all, for raising such thought-provoking questions. And he's such a visionary that he can see where we are reaching in another 5 to 10 years. And thank you to the panelists for giving their views on such a critical subject. I thank the moderator, Dr. Mrs. Bisani, also. And now I would request Mr. Makhija to express gratitude on behalf of IPNet and offer the mementos to the panelists and the moderator.
Okay, thank you, Harmeet. I think we had a wonderful discussion and very widespread views by all the panelists, whether it was Sanjeev, whether it was Dr. Garg, Ravinder Belurji, or Mr. Ravi Chandran. I think everyone has fantastic views. So on behalf of IPNet, we'd like to present a small memento. We will request all the panelists to accept it. Virtually, and we'll definitely send you the hard version of this, the physical copy of it. So first is Sanjeev Ahuja. Sanjeev,
Thank you, Ji.
request you to accept it virtually.
Thank you, sir.
The physical copy will be sent to you. Okay, thank you. And then, of course, we must thank
Ravinder Belurji.
Yes, Mr. Ravinder Belur. Sir, if you could accept it on behalf of IPNet, I'm very happy to present it to you, sir.
Thank you very much.
Thank you.
Next is
And of course, our own Mr. Ravi Chandran, because
Thanks,
Mr. Ravi Chandran was, in any case, as a part of IPNet. He was the head of South now. So in any case, he's playing a big. So thank you, sir. Thank you, sir.
Thank you, sir.
And of course, my dear friend, Dr. Risham Garg, I think his views have been fantastic from an academics point of view, not only academics, but also very, very practical point of view. Thank you, Dr. Risham Garg. On behalf of IPNet, please accept this.
Thank you. Thank you. I do. Thank you.
Thank you. And of course, we cannot forget our wonderful moderator, IP Anu Bisani. So Anuji, please, we also request you. This is a certificate of appreciation for you. Thank you.
Thank you, sir.
Thank you. Okay, over to you, Harmeet.
So there is an announcement to be made by IPNet West regarding the next webinar.
Thank you. I will be doing the announcement. So we have just seen a new judgment again by Supreme Court in the matter of NESL, which talks about priority of claims under MPID and other laws over SURFACE and IBC, etc. So on 24th of May 2025, next Saturday, 4 to 6 p.m., we have designed a theme of recovery and resolution mechanisms, priority of claims under statutory and banking laws versus PMLA, MPID, ED actions, and its interplay with SURFACE, RDB, and IBC proceedings. So we are expecting it to be an interesting topic. The speaker will be announced soon. Thank you.
Thank you, sir. Thank you very much. So I'm here to thank each one of you present here. Very good evening once again. Lovely weather, lovely discussion, and it was my pleasure to extend a vote of thanks. Today's event was not only a regular webinar, it was start of something truly significant, a movement that shall define our profession in the years ahead. The discussion held today and the deliberation by all the panelists have showed us the path forward. First and foremost, I extend my heartfelt thanks to all our panelists for their insightful words and throwing light on the way forward. You have inspired all of us to think bigger and strive for the excellence. Thank you for gracing us with your time and wisdom. I would also like to thank the President, IPNet, Dr. Ashish Makhija ji. Your relentless pursuit continues to make IPNet a platform of unparalleled importance. This webinar today reaffirmed that we are on the right paths under your stewardship. Your coherent guidance gives us the confidence to reach new heights, and for that, we are truly grateful. A special thanks goes to our dedicated moderator, Ms. Anu Radha Bisani ji, for her valuable insights and perspectives in navigating the panel discussion successfully and offering us new directions and understanding. Thank you for your commitment and sharing your time, ma'am. I would also like to extend my appreciation to Transition and the technical support teams. You work tirelessly behind the scenes, ensuring that everything runs smoothly, and your hard work is the foundation of the success of the events like this. Thank you for your unwavering support and flawless execution. Last but not the least, my sincere gratitude to Mr. Parag Singhal ji for setting the tone of the webinar by giving overview of events significance. And finally, to each one who participated today. Your presence, enthusiasm, and active engagement have made this event truly remarkable. Together, we are building a community that will not only foster professional growth, but also drive innovation and collaboration in the insolvency profession. Thank you once again to all those who have contributed, participated, and supported this remarkable initiative. The ball has started rolling, and I look forward that we will all achieve together in the future. Thank you so very much.
There is a hand raised by Sanjeev Ahuja ji. Probably wants to say
Yes,
something.
sir.
No. This was actually, folding hands. Thank you, everyone. And of course, Ashish ji to start with, because, the other day when he called, it was, a pleasure to be part of such a exciting, session. So ये इस चीज को continue रखिए, because there are a lot of people who have to voice their concerns, and especially professionals who are working on the ground. At times when they're not getting enough to, speak or share their experiences, that's the need of the hour, so that, we get more ideas, and then we can look at a hybrid. Not everything is academic, not everything is, practical, maybe in between the two. And then we can probably put up something on the white paper, help the IBBI to get a perspective, let them fiddle with the regulations to an extent. And together we all can go to the legislator and say, guys, please make some changes. We want the profession to be relevant, alive, and, stay the course. So that was it. Nothing else. Thank you.
Sanjeev, for your information, at IPNet, we have created a think tank group where you see the last meeting was held yesterday, and of course every Friday between 4 to 6. So we have listed out certain agenda items, topics to be discussed, and then of course we're going to make representations to the authorities on that.
Sure.
So I'd also
Perfect.
request you to be a part of it if you are able to make time. So please join that. I think
ठीक
that
है
would
जी
be wonderful. Everyone is invited, so everyone can join. So thank you, friends,
Sure, sure.
for all joining here and making IPNet programs a great success. Every week, I think we are touching new and greater heights. And I think 100 is not an impossible figure. It's a very routine figure for us nowadays.
That's true. Okay जी
So
चलिए
but
good.
that's the
Thank you.
last word. I think I've been told by transition that a lot of orders have already come, and I've already mentioned to them first 25 copies will be personally autographed by me. Okay, so you'll get an autographed copy from me if you are the early ones. So thank you so much, and
Sure.
we look forward to seeing you next time. Thank you.
ठीक है जी
Thank
Thank you.
Thank you.